All right. Good morning, everybody. Welcome to Stock Analysis Friday. My name is Bennett McDowell with TradersCoach.com. And today is January 31st, 2025, last day of January. All right. I'm going to go over the markets a little bit in the beginning, and then we'll jump into looking at some stocks here. If you have any that you are interested in, feel free to type those in the comments area and type those in caps if you wouldn't mind. It makes it easier for me to see. And also to type in no more than 3 at a time. You can always come back and type another 3 in as well. All right, so let me just go through some of the administrational items here, and then we'll go ahead and jump in. All right, first thing to go over are the risks involved in trading. All right, so you have to realize there's no guarantees in trading the financial markets. It's all about probabilities and risk control. And you want to be able to trade, of course, with money you can afford to risk, called risk capital. You also want to know what your risk is when you take a trade or investment, know what the potential loss could be. We don't certainly take a trade for that reason, but you do need to know what the downside is. Also, too, any recommendations I give here, any stock recommendations, or if we look at an ETF or something and I recommend that, please run that by your financial advisor to be sure that recommendation is suitable for you. I don't know your personal situation, and of course, they certainly should and can help you make that determination. All right, what else can I tell you? Past performance doesn't guarantee future performance, and I think that's about it. All right, so just keep those things in mind. I think that's important. All right, for those of you interested in day trading, we use Apex Trader Funding to fund those, and they give you free data. You can purchase a very inexpensive subscription. I'll put a link in the recording for that. But it's a great way, if you're interested in day trading, you get started, because basically you're trading other people's money, the firm's capital. And when I say that, though, you do have to pass an evaluation account. So you need to go to their website and look at all the ins and outs of it, because there are rules involved. But all the rules are basically to keep you as a good trader and not a gambler. That's the key. All right, my new book, The Art of Trading, second from the left, is out now. It's been shipped, and I think it's probably the best book I've written to date. It's a big one, 608 pages, but I put a lot of information spanning my 30-plus years trading the financial markets. And then I also have the Elliott Wave book. That's a form of technical analysis that we use to forecast target areas. And then also, too, I have money management, which is the most important thing you can do with trading the financial markets. You have to have good money management, and that includes picking the right trade size for your account. All right, so please always take a look at that. I think anybody new to trading should always start out with a money management book. I think that's super important. And then I have Survival Guide for Traders, which is a reference on how to run your business, your trading business, like a hedge fund right from your home. All right, then also, too, software. We have lots of software available. We have basically price structure software called the ART software, followed up with the OWL, PTF, TLM, and ERI indicators for confirmation. And we have scanners and risk control software as well. All right, and go ahead and give us a like, all right, before we get going. Appreciate that. All right, so let me come out of here, and let's go down here and take a quick look at Bitcoin. A quick overview of what you're looking here is, notice I have 3 charts all with Bitcoin on them. The chart on the left is a short-term time frame, which is a 60-minute time frame, and that is giving us obviously a short-term view of what's going on with that particular market. The chart in the center is a daily chart, and that is a more normal or what's the right word for that? Intermediate view, I guess, of the market. All right. Most charts that people look at when they position trade, in other words, they're holding their positions for overnight, will base a lot of their decisions on that center chart called the daily chart. And then on the far right, we have the weekly chart, which basically represents the long-term view. And when I use the word weekly, what that really means is that each price bar represents a full week of activity. So the chart in the center is a daily chart, right? So that price bar is going to represent what happens, for example, today. But there are 5 days in a week, unless there's a holiday, but there's 5 days in a week. So the weekly chart is going to represent the entire high and low, open and close for that week. That's how these different charts work. And then the 60-minute chart, of course, is looking at every hour. And so we do that because we're looking at price patterns on the different time frames that help us make decisions. So we look for confirmation, confluence, and things of that nature. So that's why we use the 3 time frames. It's really helpful. I have an order entry thing here. I'll just turn that off for a minute because we're not going to place any orders here. But in any case, when we look at the charts, and the multicolored strip up here, that's our scanners. Okay, we're not going to be using those today per se, but they are up there all the time. So I leave them up there. All right, so let's take a look at Bitcoin here. This is the actual coin itself, and we're bullish on Bitcoin. However, we've got kind of an interesting thing going on here. We have a higher target for Bitcoin. Our top, so to speak, is this area in here, this range in here, and that's 125,883 up to 148,634. So that's basically where we think Bitcoin's eventually going. And when it gets there, we're going to take a look at the market again, but that could be a significant top. All right. So if you're holding Bitcoin for the next high, when it gets into that area, all right, you kind of want to move your stops or exits in case it reverses, because that's what that means. When it gets up there, it could reverse to the downside. All right. That means the next time it gets to that target zone, be careful. All right. Because then we could see a change in trend. And that change in trend could be years long. And that means not higher prices, but lower prices. So keep that in mind. Now, if you're bought Bitcoin and you're going to give it to your kid, and you don't really care about what's going to happen next week or next month, then you don't have to worry about this. All right. But if you're, because basically, in 5, maybe 10 years, Bitcoin will be even higher, but maybe. Okay. No guarantees on that. Because things change in the currency business. Maybe it'll get replaced with something else. We never know. All right. Maybe it'll become mainstream and go up to $1 million, like some of the people on YouTube said. Never know. Okay. But the thing is, I can tell you what's probably most likely going to happen from a probability standpoint over the next couple years. And I would think if we are going to, I'm going to open up this daily chart for just a minute, because I want to just explain a couple more things on Bitcoin. And on the coin itself here, all right, we've got a very interesting thing that happened. Our pullback for our normal pullback would have been this area here, okay? These grayed areas are fair value gaps. So we had 2 bullish ones here. And basically, fair value gaps act like magnets. They are gaps in the price bar structure on the time frame you're looking at. And basically what happens is they act like a magnet. Prices tend to come back into those areas and they act as support. And then the market bounces up, takes care of unfinished business there because there was a gap. So there may be orders in there that are unfinished, and the market moves again. Back to the upside. If it's a bullish one, bearish one will be to the downside. So that's how those work. But we never hit the target zone. All right. And this target zone has a 70% probability of getting hit, which means not 100%. All right. So that happens 15% of the time. They're shallow. And that is what appears to have happened so far, because prices got down into this area here. Okay. On this price bar here. I don't know if you can see that. That's kind of what happened. All right, so 15% of the time they get a little elongated and go down further, but never cross over into a wave 1 top. All right, so that's kind of where we are on Bitcoin. So it looks like we've had some good bullishness come in, and this is a classic bullish wick. I mean, look at how long the wick is. I love these. Some people call these a John Wayne, but these are very good trading wicks to look for to the long side. What happens is you get a lot of trapped sellers in this area, and a lot of stops were hit. And so that usually can mark a reversal. So we had that. All right. The market moved up. But now look what happened here. We also had a bearish fair value gap here. Okay. And this is a bearish one. It occurred here to here. And this can also act as support. Now, if we break through these, they can act as resistance. So they, if we break through this, market might come down here and then go back up, right? So they can act as resistance or support, but they have to break through them. And we saw a lot of rejection in this area here. So that concerns me, all right? That may mean that we may get the next leg down into this target zone. Now, this would be a buy area, okay? So we'll see what happens. We kind of got a range developing here, and here right now. So it'll be interesting to see if it's going to break out or break down. And if it breaks out up, then the bottom is in here, and we're going to probably go up to our target up in this area here. If it breaks down, this would be another buy area, and then it should move back up into the target. So the nice thing about this is that whichever path it takes in the short term, it should eventually reach the upper target. So you may get another opportunity if you're a Bitcoin enthusiast to buy in here and you increase your position, or buy in case you feel you missed it. All right. If it goes up into this area here, then you did miss it, and it's going to go to that target zone. So in a case like this, let's wait. I would wait for the breakout, all right, to make a more concise decision on what's going to happen. We have a little bearish divergence here, actually quite a bit, and we did make a high here on here. So, it's kind of a little dicey right now, but in any case, I think it should resolve itself one more time to the upside. If we look on the weekly chart, we still have tremendous momentum here. So that's kind of another indication that's pulling me towards a bullish scenario in Bitcoin. All right, so that's kind of all I wanted to say on that. Let's go ahead and jump in and see what's going here. All right, good morning, everybody. Yes, all right. So Stuart has NVIDIA. Yeah, NVIDIA. Everybody wants to know what's going on with NVIDIA, right? So let's take a look at that bad boy. All right, you can see where it's come down recently, causing all the stir. And we'll take a look here. All right, so one of the things, this red line represents the high over here. So I'm going to remove that. We don't need that anymore. All right, so, because we looked at it before. All right, so we got a red PTF over here. All right, that's still bearishness. So what that basically is telling me is that there is a higher probability that even though it came down, it looks like it's finding support here. This red PTF is indicating more lows to come. Okay, so that's kind of where I think we are with that. We did breach a high here. Probably what's interesting here on this is if we don't get a recovery soon, all right, then we're going to go into a major correction. If we get the recovery, then we're going to go right up to this high here. Okay. So once again, kind of like Bitcoin, it's kind of we've got to wait for it to tell us what to do. We'll certainly keep an eye on that. So this is a wave 3. After wave 3, we will have a correction, which we may be entering into now, and then more highs. So the target currently, unless actually this actually can be changed a little bit because we technically have not seen wave 4 yet. So the target is if we go into a correction right now and don't make another high before that owl turns red on the weekly chart, our target is 180 to 236, which is pretty close to where it was before. And the short-term top on wave 3, we've come pretty close, is 172 to 223. So the way you read this is a top on the far right-hand side after the correction, all right? This is a top that will signal the top over here. That makes sense. Probably confused the hell out of you, but that's kind of the way it is. So a little bit more downside on NVIDIA. I would expect if we're going to make another high before we see a more significant correction, we're going to do it probably within the next couple of weeks, or it will sell off. All right. So how's that, Stuart? Did I totally confuse the hell out of you? So hopefully, basically, if you're long term, you hold it. All right. If you're short term, you probably would have lightened up by now already. Okay, that type of thing. All right, LH, let's take a look at that. All right, so on this one here, all right, this is kind of what could happen to NVIDIA in terms of a beautiful correction underway here. So this is a wave 3, all right, in terms of the Elliott wave. The wave 3 is very easy to distinguish because it's the most powerful of most of the wave you'll see in the market. So that's a wave 3, and we're in a wave 4. These little red lines here are all liquidity areas that I have software that draws that on. So you don't have to pay attention really to that. But in any case, let's see, this correction, we hit the correction. This is a fib correction. So this is a target zone. So it did hit the 70% area. It has bounced off there. And let's just take a look at the lower time frames to see if there is any more downside. Looks pretty good. So I think this actually looks pretty decent. Okay. Yeah, I would say probably let's put this on the buy list, LH. And the nice thing about this one is that let's put a target on here too. And you're going to have to hold this one. This is not a quick trade. None of these usually are that quick that we look at. But let's just put a quick target here of 375 to 488. Okay. So there you have it. Now, if it dips down below one more time, I'd be surprised, but the market does surprise me sometimes, of course. Then that's another buying opportunity. So at this particular point, though, it's jumped off there pretty well and pretty significant. So it looks pretty good. And we have a green PTF still on the daily chart. This is a short-term reversal up here. When I say short-term on the daily, that means it could come down for a week or so before turning up. But with the green PTF, I'm pretty confident that's just going to be brief. All right, let's take a look at SNOW. All right, SNU. We actually had a little snow here in Arizona where I am. Speaking of snow. All right, so let's see what we got cooking here. So green PTF, all right, indicating eventually more highs are coming. We have a green here. We had a nice boost off the bottom. So not so bad looking. Now, I could recommend this here. All right, I think we may have looked at this earlier. I'm not sure. But this would have been a better entry down in here when it broke that pyramid and took off here. You came down a little bit here. Problem is we could come back down before going up. So it's a little bit on the high side, but I basically your money will be made on this if it continues to take off and double. Basically, this is either double your money or not. Okay, because it's already retraced enough that if it heads back down, it's met a retracement requirement. What I mean by that is basically if you take a fib here and here, all right, it's already hit the retracement. So is it going up or is it going down? According to this, it should go up from here, okay? But this didn't really go low enough here to be too convincing, but possible, okay? Not my favorite, so I'm going to let this one go at this particular point. But I see potential for this one. Maybe waiting for another pullback and see if that bottom holds. Okay. Hopefully that makes sense. All right, Lowell, how are you? All right, KR. Let's see what's cooking with KR here. All right, so you're holding this. All right, and INO and Tesla. Okay, so let's see what we got cooking. All right, right away, their PTFs are all neutral right now. Let's take a look at this bigger picture over here. All right, we're in brand new territory, high territory here. We got a little bearish divergence. Okay, a little concerning here. Well, actually, that's not bearish divergence, really. That's bearish divergence. Okay, so because this didn't have a higher high, so that's the divergence. So you got a little situation going on there. Actually, we don't even have that because it's not even higher than that. I thought that might have been pretty equal. Yeah, okay, bearish divergence between here and here. All right, so we kind of got that. Even when it's flat, it does look like it went a little higher. So let's think about where the possible target on this is. I would not recommend this to anybody because it's already done its thing, right? So for Lowell, what I'm trying to do here is figure out where it's a possible top is, and that's 68 to 84. I keep your stop low since you've been in it a while, right at this pyramid here. Okay, I don't know how long you've been in it, but if you've been in it a long time, that's fine. Otherwise, use the stop on the pyramid on the center chart. Okay, it's nearing a top. Okay, so you got to be a little careful here. All right, INO also holding this one. All right. Was this a short trade or a long trade? Hopefully a short trade. But if you took this based off the pyramid here and you had your stop would have been under here, so you'd be out. Okay. And you kind of at this particular point, I don't know what your position size is or anything of that nature. But if you're losing sleep at it overnight, get out. If your position size is so small and it really doesn't matter, and you just want to hold it until it turns around, I get that. Okay, you got bullish divergence building here. Stops are a funny thing. All right, everybody says you should trade with them, and of course I agree with that. Who doesn't? All right, especially if you're short-term trading, but also too. They can be difficult to manage because stops are often run by the institutions. Okay, so it's a double-edged sword. So you got to give your stop usually a little bit more room than where most of the retail traders are, right? So if their goal was to run the stops here, they've done that, right? And at this particular point, though, we still have red here. So it's not done going down. It's at $2. And if your position size is so small, then you got to figure out, well, if this thing goes all the way down to zero and busts, how much would you lose? And if that's something you could afford to lose, okay, just keep it. All right. So that's a personal decision. So I'll let you decide on that, but it's still coming down. Okay. All right. Tesla. Let's see about this bad boy. So Tesla here. All right. I actually, it's got a green PTF across the board. But what I was looking at here is that, again, kind of like Bitcoin, we hit the 15% area, but not the 70 yet. And we have a red PTF. Now a red out. So this is good because it needs to go red for a major 4. And this can stay green during the entire correction. And then basically it's telling you this is not the final high. But the PTF is not telling you how deep the correction is going to be before it returns and takes out that top. So that's the dilemma here. So do we have an A, B, C and a bottom here? Or is this a longer broad-based A, B, C and we're going to go down here? Again, if we go down again, this would be a buy area. If we go up from here, then the next target on top of that would be a sell area. All right, so that's kind of the way I would look at that. Now, what's interesting about this is if you look at the weekly chart, you've got the owl still strong here. So you may not get a major 4 on this, but I don't want to say anything until the owl will need to turn back to green before that. So just be a little weary of that. I would continue to hold Tesla at this point. Could it go down a little further? Yes. All right. But this would be an accumulation area. All right. And do it that way. If you're worried about it and you don't want to take the ride down if that happens, then get out at the pyramid. The pyramid's got a nice stop for you right there. All right, and then get back in after the ride down is over. All right, because there's a potential that we could move up from here. All right, so that's the only reason for, I would say, hold it with a stop under that pyramid, okay? Do it that kind of way. All right, hopefully that helped. All right, now we got Al here is with Burke, B-I-R-K. Oh, helps if I type it in right? Burke, not Nurk, but Burke. All right, let's take a look at Burke here. All right, so not a very old stock. Al, this one's about, what, a year old? So kind of interesting. Data on the weekly chart goes back to about 2023, so maybe 2 years old. All right, so here we are here. Nothing there is screaming to me to buy it from a technical standpoint. Now, you may have heard something on the news. Okay, all right. But even on the 60-minute chart, you got bearish divergence. So the 60-minute chart will have a little bit more data on these short-term stocks, young stocks, I should say. So I'd say no, okay? No for the long on that. Let's check out your next one. All right, let's see about this bad boy. All right, this has got a nice weekly chart. Okay, so again, this one goes back to 2021, but at least on this one, we have enough to see a wave 3. All right, had a pullback. There's your ABC. So probably new highs on this. So let me just get a target for you on this. And this target is going to be one that you're going to have to wait a little while, right? Let me just make sure I get this right. Okay, so that is a 2 there. I draw my fibs a little differently than other folks do. So I use the Elliott wave to draw them. Okay, so my target on this is 51.44 to 66.07. So, it jumped off its bottom really quickly. So since the bottom is, what was the bottom, about 28? It's already gone up. It's almost doubled the money since it jumped off the bottom here. Look at that. Not quite, you know what I'm saying? So it's a little late to get in. So I'm not going to recommend this. And also, too, if you go in here, don't be surprised if you get a pullback to 35 before it goes back up. I think the way I would do this, since we're looking at this as if we missed it, I would wait for the pullback. Don't buy the highs here. You may miss it. It may just go up and make a high. But I would wait for the pullback and get a better risk to reward on it. Okay? That's what I would do. And that's VITL. Lowell, my pleasure. Happy to help, so to speak. All right, so let me take a quick look at, we did cryptos, we did that. Let me just go and take a quick look at the S&P 500. Oh, I can also look at the NASDAQ, but let me just start if I can find it. All right, let's see. I'll start with the NASDAQ here. All right, so as you can see, NASDAQ, a little brief hiccup, and now it's stabilized. So I want you to just take a quick look at some things here. If we draw a trend line on the NASDAQ, all right, we can draw a couple of them. That's kind of a more longer term one, so to speak. Then we have a shorter term one up here, okay? So as you can see, the uptrend on the weekly chart is still in place. But what we also see is we have an extremely unusually long bullish owl. All right. And so, trees don't grow forever and neither do trends, right? So you got to be a little careful here. You got a little bit of bearish divergence, not much, but a little bearish divergence building here on that time frame. And we are in a long-term target zone right now. Okay. So, we got to be a little bit careful here. Okay. So my personal feeling here with this, what I tell people, and I'm not a financial advisor. I used to be a long time ago, but I'm not now. But I would talk to a financial advisor. But my recommendation when people ask me is I would not be a long-term buyer now. All right. Let's wait until the bear market, and then you'll get a lot more value for your money. So I think even Warren Buffett has gone a lot into cash these days. And things right now, could they go higher? Sure. Okay. And certainly we got an uptrend, but I think there's more risk going long from an investment standpoint right now than not. Okay. So I would kind of wait. All right. Now that doesn't, if you're a short-term trader and you trade for a week or two, that's different. Okay. Then you have every reason to go long because the trend's still up. But from a long-term investor, I would be very weary about putting a lot of dough in the market right now. Okay. For long-term investments. Now, if you're young and you're dollar cost averaging and it's part of your game plan, and your financial advisor is advising you to do that, hey, fine, okay? Because this correction, when it happens, will be a doozy, but it will be over in 2 or 3 years, and then markets will make brand new highs. So by the time you're ready for retirement, you'll be okay. But that's why people don't always time the market. They'd rather dollar cost average in it, and it is a winning strategy. But we're awful high and we are in a target, and the next bear market's going to be a doozy. Okay. We're talking about a multi-year bear market when it comes. So you gotta be able to withstand that, so to speak. Okay. All right. So what else do we got cooking here? What else? Oh, let me take a look at the S&P. Not fair to look at just the NASDAQ without looking at the S&P. There she goes. Okay. Same thing with the S&P. I mean, all the indexes are going up. The S&P has reached a new high, though, recently, I think. Yep. All right. Same thing. Trend lines can be drawn. We got longer term ones and shorter term ones. So, if you go below those trend lines at all, then that's the first shot over the bow. If you belong to my market opportunity report, which is a weekly update on all the major indexes, and I do a video with that on Sunday, and you want a really detailed look with key levels of support that we're looking at all the time, then that's a great service for you. And I'll put that in the link on the recording as well, if that interests you. But that's where we really go into the detail analysis using Elliott wave, etc., on the different indexes. All right. Well, I think I've got them all. I think we're good for today. So we'll be back next Friday, and we'll see you then, and it will be February by then. All right. So everybody, have a great weekend, and thanks so much for tuning in, and we'll see you next week. I'll put a little music on. Hey, for fun, let's just go take a look and see what some of the day trading time frames are doing here. Let me grab the NASDAQ. Put it on the E-mini. Nice run up on the NASDAQ today. So we've got a nice fair value gap down here, which looks like to me going to coincide to a fib retracement area pretty perfectly. So we'll probably work our way down there now. We've got a red owl here. So, if you're shorting the market here, that makes sense for the next, 30 minutes to an hour. Then when we start getting into this range, you can look for long trades. Okay. So that's kind of where that is right now. All right. So have a good one. I'll put a little music on. Let's see. I'll magnify this a little bit so you can see the price bar is actually moving, which is kind of fun. All right. And all right. So we'll see you back here next week. Thanks so much.